Welcome back. Harvard University is breaking tradition and changing its investment strategies. Jane Mendillo, CEO for Endowments at Harvard, is setting aside cash to diversify investments as the school gets ready for a decline in fund returns. Our own Jillian Wee has more details on that story. So, Jillian, Jane, just, I think, wrapping up what her first year, I should say, as head of Harvard's endowment. Talk to me about kind of what she's done there while...
So she joined in July 2008, and 2 months later, of course, the October market tsunami hit. And at that point...
Nice timing, right?
Yeah, great timing. And she faced a portfolio that traditionally operated on borrowed cash, so that meant that it was short of cash by 3%. And so what she did was she has kind of been restructuring the endowment. She let go of 50 people. She tried to put some private equity stakes up for sale, and has also been raising cash, as you know.
So how is this, I mean, shaking it up, right? She's revolutionary, or is that not the case?
I mean, yeah, she's taking away from a strategy, which means that, well, they were short of cash to amplify returns. But now I think after the events of the past year, with Harvard making cutbacks, issuing debt and so on, she's decided to set aside some cash for whatever.
Which is unusual, right?
Yeah. I mean, that's a drag on returns, too. So
right.
that will probably lead to lower returns over the next few years. So in a way, yes, shaking it up, and also I think trying to be more flexible and going after opportunities, and also having enough money set aside for private equity and real estate.
But it's a conservative mood. It's almost as if she's kind of contributing to the hoarding problem.
Well, traditionally, I mean, endowments have operated as, well, the largest endowments, some of them have operated like big hedge funds taking up leverage. I think we've seen in the past year, as schools have cut budgets, issued debt at unprecedented levels, that, you know, they've really needed to rethink their theories on liquidity and being able to access cash instead of hoarding it.
You know, Jillian, you know this. We like to watch what these guys do. They're managing tons and tons and tons of money, so we kind of watch them for strategy. I mean, what does she plan to do with the endowment?
So we were in her office a week or so ago, and she was talking about looking at natural resources, real estate, and she also hired a couple of people recently from hedge funds to expand their internal operations, and she also talked about doing more in international fixed income. And we also expect her to hire more fund managers as well.
Do you see other endowments going this way? Because we had seen endowments getting, as you said, more and more like hedge funds, going more and more into alternative investments, short on cash so they could amplify their returns. Do you see everybody following Harvard's lead out as they did follow it in?
I'm not sure it's so much following Harvard, but across the board, just as schools have been caught in a cash crunch, I think we've seen more and more schools go into more conservative bets, taking fixed income, treasuries, that sort of thing. So yeah, increasingly so.
Just get a few seconds. I'm curious what her mood was. I mean, it was so crazy when she came onto the job. Does she feel like things have settled down? Just quickly.
I mean, yeah, she seemed really calm. She seemed to be on top of things, although I guess you never really know.
Yeah, exactly.
All right, Jillian, thanks so much for joining us.